Hey traders, in this lesson we are going to be exploring the piercing line or dark cloud cover candlestick pattern. So there are a few examples here on Google. Basically what we're looking for is in the case of a bullish piercing line, we want a bearish candle to print, and then we want the next candle to gap down. So it opens below the close of the previous bearish candle and then rallies up and closes above the 50% mark of that previous bearish candle. And then obviously the opposite for short trades. Same pattern, opposite direction. We want a bullish bar and then a bearish bar that opens above the close of the bullish bar and then closes below that 50% mark. And then by adding a bunch of filters to this pattern, we can create a very effective entry pattern for our trading scripts and indicators. So let's jump over to the Pine editor and get started. So the first thing I'm going to do here is detect a bullish piercing line. I'm going to create a new variable called BPC, short for bullish piercing line. And for this, we need to check, did the previous bar close lower than it opened? Did it close bearish? So let me find an example of a piercing line before we continue. So here's one here. Not the best, cleanest example, but it is an example of a piercing line. We have a bearish candle that prints. The next candle gaps down, it opens lower than the previous candle's close, rallies up and closes well above the 50% mark of this previous bar. So this is a great example to build our code off. So what we want to check is the previous bar bearish? That's the first condition for a bullish piercing line. And did the current bar open lower than the previous bar's close? So there's our two conditions met. Previous bar's bearish, tick. Current bar opened lower than the previous close, tick. The final thing to check is, did we close above the 50% mark? So for that, we need to calculate 50% mark of previous bar. Or in other words, calculate the piercing line value. For that, we need to do a little bit of percentage calculation here. We need to subtract the previous low, from the previous high, then multiply that value by 0.5, and then add the previous high back onto this result. And now if I plot our piercing line onto the chart, save our code, add this to my chart. Now it's a bit messy, it's a bit hard to see because we're drawing all of these and joining them. But if I zoom in here, you can see that this blue line represents the 50% mark of the previous bar. So now all we need to do is check, did the current bar close higher than that line? So let's throw that filter in now. We can say, and is the current bar's close greater than or equal to the piercing line value? Now, this is a matter of preference. You could make it greater than, so it can't close right on that blue line. It needs to close above it. But I think the official pattern rules is that it can close equal to that line or greater. So now let's use the plot shape function to draw this bullish piercing line onto our chart. I'll give it a style of shape.triangle up, a location of location dot below bar, and a color of color.green. And I'll comment this, draw candle setups. Save the code. And now we're getting a big green triangle underneath our piercing line candle. If I zoom out, we're now detecting heaps of them. And as far as I can see, they are all technically valid. Now we could add other filters here. For example, I'm not sure what the rules are. To be honest, I've never used this candlestick pattern in my trading. This was a lesson requested by a student in the previous version of this mastery course, version 4, when PineScript was version 4. A student named Lucas emailed in and asked me to cover this candlestick pattern. I don't actually use this pattern in my trading because I mostly trade Forex, where gaps are rare. This is definitely more of a stock market pattern. And even though I actively invest and manage stock market positions, I don't currently trade or day trade the stock market. So this is not a candlestick pattern I'm familiar with trading. But looking at this, I'm not sure if this counts as a valid piercing line candle, because even though the first few conditions are met, technically this looks more like a bullish engulfing candle to me because it engulfs the previous bar. So you could add another filter onto this if you wanted to. We could say, and the current bar's close is less than the previous bar's high. If I save this code, this will go away now, but this one stays. So that's a filter you could add on if you don't consider a bar that closes above the previous bar's high as a valid piercing line candle. That's obviously a matter of preference, as all of this is. I'm just showing you the techniques I use, but you can feel free to tweak them to your own liking. But anyway, the final thing we need to do here is detect a dark cloud cover candle, which is the same candlestick pattern but in an opposite direction. So for a dark cloud cover pattern, what we need is the same as our bullish pattern but in the opposite direction. So we need the previous bar to have closed bullish, higher than it opened, and we need the current bar's open to be greater than the previous bar's close, and we need the current bar's close to be less than or equal to our piercing line. So because the piercing line is the 50% mark, it's the same value for both bullish and bearish patterns here. We're comparing the closing price to the same 50% mark. And now let's plot this onto our chart. I'll change this to triangle down, change this to DCC or dark cloud cover, change this to above bar and change the color to red. Save our script. And now we are getting bearish piercing line candles or dark cloud cover candles drawing onto our chart. But we still have the same problem as before where these patterns, I just don't know. This doesn't look right to me. This doesn't look like a candlestick pattern that anyone would want to trade. This is just a lower close bar or a bearish engulfing candle in the middle of nowhere. So let's add on our little filter here to check that the current bar's close is greater than the previous bar's low. And that will get rid of all of these funky patterns here and leave us with these better quality reversal patterns. And it looks to be a decent pattern on, at least on this market in this time frame. If you combine this with other filters like RSI being overbought or oversold, I can see this being a effective trading pattern, or combining it with market structure. This seems like a pretty decent pattern for the stock market. It's very similar to bearish and bullish engulfing candles. So let's add a filter onto this script, just a simple filter, and then we'll wrap up this lesson. I'll create a new section here and call this Analyze Filters, and I'll leave it as filters. You guys can play around with other filters if you want to. In the next section of the course, we'll cover indicators in more detail, but for now, let's just keep it simple. Let's stick with an RSI value. Let's get the TA.RSI with a source of closing prices and a length of 14. And then let's create two new variables here, bullish filters and bearish filters. So in this case, for a bullish setup, we want the RSI to be oversold. So let's say here, is the current RSI value less than 30, or was the RSI oversold on the previous bar? So is the current bar oversold, or was the previous bar oversold? And for bearish, it's the opposite direction. So was the RSI over 70 on the current bar or on the previous bar? And now we can add onto the end of our candlestick pattern code here, our bullish filters and bearish filters. And now you could add other filters here if you wanted to. You could add a moving average. Maybe price needs to be above or below a moving average, or you need confirmation. Maybe you need a bullish piercing line followed by a high close candle as your entry, or lower close for a dark cloud cover, etc. You get the idea. You can get as creative as you want with your market filters based on your experience as a trader and your preferences. But for now, let's save this code, and we should now be getting a lot fewer signals, but arguably, perhaps, higher quality signals, since we are trading a reversal pattern combined with a indicator condition that typically indicates that a reversal is imminent. Now, just because the RSI is overbought or oversold doesn't mean the market's going to reverse. We all know that. But when you combine the RSI being overbought or oversold with candlestick patterns, with structure, this is a great example right here. Not only are we at a major level of structure on this market and time frame, but we have the RSI overbought, and then we get our entry pattern. This is a phenomenal counter trend trading opportunity that I would gladly take in my own trading. Obviously, I would backtest it first to make sure it does have an actual edge over the markets, but this is the kind of thing I would look for in my own strategy development, combining 2 or 3 different filters and an entry pattern to get high probability trading setups. Now, before we wrap up this lesson, I just noticed that we have a problem here. This has been detected as a dark cloud cover when it's not a dark cloud cover. So even though this technically gapped up and opened higher than the previous candle's close, and then closed lower than the previous bar's 50% mark, it's not a bearish candle. So let's add another filter onto this pattern and say, and is the current bar a bullish bar for piercing lines? And is the current bar a bearish bar for dark cloud cover candles? So now when I save this code, this setup will go away. There we go. But this one stays, so that should be a little bit more accurate there. And also notice that we don't get many patterns being detected, especially bullish patterns here. So you might want to play around. You might want to add some user inputs here to tweak your RSI values. So you could tweak the length as a user input. You could tweak your overbought and oversold threshold levels as a user input. For now, let's change the RSI to 7, period length of 7, and see if that gives us more signals. And it does. Very nice reversal pattern there, even there, depending on your profit target. Obviously, a bunch of losing trades here. Probably not the best idea to be shorting Apple when it's on a rally like this, when it's in a bull market. But when it's going sideways, great buying opportunities, great mean reversion opportunities, and potentially sometimes trend continuation opportunities, depending on what you set your RSI values up as. And you could also tweak this 50% mark if you wanted to. Maybe you could make it the upper 70% and the lower 30% if you want stronger momentum. There are a bunch of different filters you could add to this candlestick pattern. Anyway, that will do it for this lesson. Hope you found it interesting. I'll speak with you in the next one.